All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. Glad to be with you this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. This is your first time. Make sure to hit that like button if you like these videos. Turn on notifications so you don't miss any of our videos. We do 5 every week plus 1 weekend recap. So make sure to subscribe to our channel. Always content, your questions, answers, charts, all that good stuff for you guys. Good morning, Ryan. Hope you're enjoying your morning coffee this morning with me. Let's go ahead and get to work. Well, I'm just going to say it right now. Santa Claus is not messing around right now. We're above 16,000 on NASDAQ futures, up 114 points. I must say I don't feel the best right now because I have QQQ puts playing that down gap fill. But, you can't win them all at this point. Technically speaking on Qs, we have not broken yet. 390.84. That's pretty much the Friday highs. We just gotta have to see what we get. I mean, the last thing I want is that we just chop around here. So again, I want to, kind of talk about the elephant in the room, my QQQ puts, which are not looking the best. It's very hard to short a bull market. It is very hard to play reversals. It's very hard to play this kind of chop. It's just the reality. Damn, NFP weeks are tough. Okay, S&P futures 45.95, still smidge below 4,600, but 4,600 is going to be a key level. 46.07 is our high from December 1st. That was on Friday. So if we break that, that's sleigh bells ringing. That's for sure. Russell, I'm still long the Russell, 1871. So not all is lost. I'm about 9 points away from my entry. Russell's up about 0.65%. That's outperforming the S&P. That's outperforming the Dow, but a smidge below the NASDAQ heavy tech. So we'll see if the small caps catch a little more bids. Again, I'm still looking for 1900 to hit, maybe by the end of the week, if we have a better than expected non-farm payroll. Again, we're going to talk about that tomorrow, class, when we're previewing the non-farm payroll report. Today we had ADP, which is the private payroll report, and that came out weaker than expected. So I know we're not going around the horn at this very moment, but I really want to get this out of the way so you guys can have an understanding of why the market's up today. Private payrolls increased 103,000 in November. That's below expectations. Private payrolls grew 103,000 in November, below downwardly revised 106,000 in October, and 128,000 was the Dow Jones estimate. After leading job creation for most of the period since COVID hit in early 2020, leisure and hospitality recorded a loss of 7,000 jobs. Services-related industries provided all the job gains for the month, as good producers saw a net loss of 14,000. So what do we take from this information? Remember, this is private payrolls. And again, what's been that kind of balance beam that we've been kind of having to level? It's the labor market. Again, the tighter the labor market, the more people working means more demand. And again, more demand means more inflation. That's it. That's the economic explanation of that. So now that we're getting a little bit of a reprieve from people not working, I know it sounds kind of backwards. How can we not want people working? Again, we want people working. We want to have a nice balance where, you have some unemployment, you have a little bit of people looking for work, so that brings down wages. Why is bringing down wages good for an economy? Again, that brings down inflation. That's what we're looking for. The next thing here that we had was Delta Air. They went ahead and made a comment. I believe this is a CEO. Quote, "We had a record Thanksgiving and Christmas, and Christmas is shaping up to be very strong. Business travel is starting to rebound again, which is partly a function of the Hollywood strike being resolved. We're very confident." And this is where I put afterwards. I go, a good way to measure an economy is the airports and the malls. So if people are flying and people are shopping, that's usually a good sign. What did we just have the past Black Friday? We had records on, what was it, from Adobe that was saying Black Friday and Cyber Monday shopping records. So people are consuming, but again, that's going to hurt a little bit of inflation. But again, still the economy roaring, a 5% in the third quarter for GDP. I mean, you really can't say that's a bad thing at all. Again, just for the inflation issue. So just wanted to kind of give that macro information. Let's keep it going here. 10-year Treasury yields continue to fall, 4.142. We're watching that 4% level. Remember, 5% was that top. Well, we never got to 5% on TNX, but that was that level. And then 4% being a very key psychologically satisfying figure. Round number theory, keep an eye on that. Dollar index pulling back 103.92. That's going to help equities. Volatility index still very mute, 1270, down 1.17% this morning. Crude oil continuing to tank, $70.81 a barrel. We're getting close to that six handle, which is around, again, below 70. Gasoline futures, $2.06. This is the lowest gasoline prices in 11 months. Reuters put out an article talking about how that's going to be a help to those who are shopping for Christmas. Let's see here. U.S. gasoline prices, this is from Reuters, are the lowest they have been since January, and Christmas could fall below $3 a gallon nationwide. We're less than $3 here in Central Florida for the first time since 2021, which should boost consumer confidence during the holiday shopping season. We've always talked about that consumer confidence, right? University of Michigan. What is consumer confidence in the States class? It's always the same thing, gas prices. For some reason, that is our barometer for confidence. So if we have the Dow up and gasoline prices down, and again, the Dow, 401ks, people investing, again, that's the big New York Times, Wall Street Journal number that comes out in the newspaper, right? If people still read newspapers. Again, still helps that confidence. Gas prices going down being another. That's something that you can see visually every day. So again, not everyone is looking at their portfolio daily, but gas, when you're driving to work and driving home, and then you see that price going down, a little bit of confidence is going to tick up. I think it's rather benign to see just a 20-cent move. Again, unless you're driving a dually, some V10, fine, or a diesel truck. Yeah, I get it. But the assumption is that I don't think people are driving these monster trucks to work either, or driving hours to and from. So even if gasoline, you saved $1 a gallon and you got 10 gallons, that's $10. Yes, every little bit helps out. That's fair. But I don't think it's such a boom where the surveys should reflect that. It just seems rather we're just conditioned to lower gas prices. We are conditioned to higher stock prices. We are conditioned to high housing. That's what America really is about in terms of the economy. Let's answer some questions before I go crazy here talking about the same thing. Do you think we're going to break 4,600 on the S&P this week? On SPX, I think we closed. Where do we close on SPX? 45.67. We're at 45.96. If we have a good non-farm payroll report below 100,000, we should get to 4,600. But if it's a high NFP, let's say if we have more than 150,000 jobs added, 200,000 jobs added, that's going to add pressure to the stock market, which is kind of inverse. You would think like, oh, more people working, that's a good thing. But again, the inflation Fed thing, that's kind of what everyone's looking at. Everyone's pricing in, the banks are pricing in rate cuts for next year. I don't agree with that. I don't see a scenario unless the labor market starts to crack, where you start having soaring unemployment. I don't think the Fed is going to rush to cut rates. I think they're going to be more likely to hold rates as the economy kind of levels out. The good news, you have gasoline prices coming down. But yet you have commodities like gold and silver going up. So the dollar is coming down. Remember, we talked about the dollar ad nauseum for about 2 years, really since last year when we got that spike in the summer. Prepare for when the dollar falls down. The CNBC, the Fox Business, talking heads, Bloomberg's, the suits are going to talk about how the lowering dollar is bad for the economy. That's inevitable. So again, we can't make everyone happy. We know that clicks and bad news sell, but I'm letting you know now. If stock prices are going to continue to go higher and you want stock prices to go higher, that DXY needs to come down, period. That dollar needs to come down. You're not going to get higher dollar and higher stock prices. It's just not going to happen. And if it did, it wouldn't be sustainable anyways. Gold futures are up 0.55%, 2047. Remember, we hit all-time highs just on Sunday. What is the market telling us about gold? Is it safety? Well, no, because Bitcoin is soaring, and Bitcoin is probably the riskiest asset you can get. That is the dollar. The only thing right now in the commodities world that's insulated to the dollar, where the dollar movements are not even an issue, is crude oil. Why? Because of demand in China. Until China gets their stuff together, economically speaking, oil is going to continue to fall. We are drilling as much oil as we have ever had throughout our history. We got plenty of oil to give out, to sell. The issue right now is China demand. That's why the global price, the crude oil price, is coming down. So we benefit, yes, of course, but Again, that's some stuff that we got to be watching and see if that demand gets weaker. Remember, crude oil coming down, guys, might help everybody initially. But how many jobs are created because of these oil companies? Then these oil energy companies that people own are going to slash guidance, slash production. There's going to have to be more mergers and acquisitions, and you're going to have layoffs. So, are we starting to front run the possible layoffs? I know that possibility starting in the energy sector if crude oil continues to sink. So again, we want balance. We don't want just 99-cent gas either, which sounds amazing. But again, a lot of people would be laid off if that was the question. Silver futures flat right now. Copper $3.80. We're still looking for $4. Euro dollars flat 107.92. 147.20 for the dollar yen. Just Flatsville here on Forex. 135.66 down 27 pips for the dollar Canadian dollar. That's actually coming down despite crude oil coming down as well. And pound dollar is flat. 2 pips, not even. 2 pips. 44,560 for Bitcoin futures. I did not hold my Mara runners. Mara was on my watch list. It gapped up and broke on Monday. Can't chase that. But Bitcoin, again, we said 40,000 by the end of the year, and we smashed that. Now the question is, we're going to get to 50. Oh, man, we would need a lot of things to go right, mainly the dollar to go down even further. If we get to the dollar at 100, yeah, you'd be at 50,000 Bitcoin. Because just remember, if you're pricing in dollars, if you look at Bitcoin versus the euro, Bitcoin versus the yen, totally different conversation. But since we're pricing it in dollars here, we have to go by that currency. 22.89 for Ethereum, that's down 0.13%. And that's where we are around the horn. Let's answer some questions here. What's the game plan for ES above 46.08? What is the next target? The next target is all-time highs. Like I've said since June. 48.08, that's where you're going. You break 46.24 on ES, that is where you're going. It will not be a straight shot, obviously, but we have about, 3.5 weeks to get there with about 2 weeks of short trading. So if we're looking just for the next resistance after this break of 46.24 on ES, it's 47.44. And again, we're still testing that trend line, that main trend line. Gotta break 46.24, and then it's Santa time here at 48.08. GME, let's see it. Reversal on GME. I wanted to trade this name, but I'm glad I didn't. It's just way too volatile. Rejecting that 100-day, here's where you're going, 1356. That's your next gap fill. But in order to get there, you got to break below 14.25. So not the best here. If you're looking for more additional upside, you got to break at least 1804 on GME. Levels to buy more Palantir. Everybody loves some Palantir. Right here, 1820, 1830 would be the first buy zone. That's your support. Right now, it is coming down at 1773. So you're still above the 50-day moving average. Right here ain't a bad spot. But I think waiting for this gap fill here at $15 ain't a bad place either. That would be your, Black Friday shopping sale price right here, because that's the main gap to fill here, at least since November. So if we retrace this whole deal, which may be tough sledding if the NASDAQ continues to run higher, but again, that would be a pretty decent level to get in. But right here, the 50, not bad either, right at 1768. But you probably want to spread out your buys a little bit. Again, if you're trading, hundreds of thousands of dollars. But again, if you're doing just, hey, I want to buy a couple of shares, yeah, you could buy here and there. I mean, the price fluctuation at that point will be so minute. It's really if you're just putting a big position on, is kind of where you want to spread it out in terms of dollar cost average. What time does the NFP number come out? That comes out on Friday at 8:30 in the morning. We'll talk about that together on the morning note as well. Good morning, everybody. Let's see. Pump it up. Well, yeah, look at the market here. And again, not feeling too good holding QQQ puts, guys. And again, I was just looking for that gap fill. Let me see if I can show you guys again. You could see. And again, I want to show you the mistakes. It's important. The 20-day moving average, the breakdown below. I mean, it wasn't like we just kind of slightly wicked it. It got down to 382.69. And again, we were targeting here, but a resilient market, a resilient one. And we had all the excuse in the world to pull back. A great November where basically it was like no drawdown November. Everything was bought. And then that 20-day, those buyers are just relentless. And corporate buybacks are for the most part done, guys. This is probably natural buying and selling here from hedge funds. And this is what you get. If you work for a hedge fund, how are you going to explain to your boss at the end of the year when you want an end of the year bonus that, yeah, I'm still short, we're going to reverse next year, you're going to see we're going to get a recession. Yeah, that's probably not going to work. You're going to have to like at least play catch up in a sense. So, how many traders, how many funds have missed this rally since October? Many have, I'm assuming, because, how many people got squeezed out. So, obviously with QQQ being a difficult one, we have not broken. Again, I have 390.84 as the resistance level. You're above the 200 on the 1 hour, true, but we're not even above the Friday highs. So technically speaking, QQQ is down week over week. So it's not like, we're breaking out. Oh my God, you're soaring. Yeah, listen, 394 breaks. I mean, at that point, it's Sanibel, man. It's Santa's bells ringing at that point. I also filled Shopify as well. I'm sure I'm going to get that question. And Shopify, I really like. Now, it's a name that I also talked about on the investment club. And again, a lot of the guys on investment club were asking, hey, instead of buying and selling, can we talk about stock swinging? So for example, on the 9th of October, I went ahead and set up this cup and handle. Again, Microsoft, 11% from all-time highs. That's my year-end target on the stock. We broke above that, so that's the investment club. But the other one was here on Shopify, and I sent this out on July 12th. The entry was 65.21. We're trading now at what, 73.30? Not bad, up about 11%. But the stop here at 44.97, that's the 200 MA. We could move that up a little bit to around 56, if anything. But 84.31, that's that gap fill on the daily. That's about a 29.2% upside. That was the target, or this is the target. 83.96 or 84.31. And again, just really hold that support here, which is the July 13 level of 71.16. That's what we got to hold. Right now, we're slightly above it. We had some news, some upgrades and downgrades on Shopify. So I went ahead and bought calls for next week around 77. And I think we get there right at 77.93. That's the March 17, 2022 highs. That's what we're looking for. So again, I like Shopify for more upside. Again, we've talked about it since July. So we'll see if we can at least hold up that support of 71.37. The good news, guys, is that we bought time. Because if we did not buy time, we would have got smoked today with those downgrades and upgrades that we had. Let me do some of them. Went ahead and took a photo for you guys, or screenshot, excuse me. Where is it? Here we go. Wedbush downgrade Shopify to neutral with a price target of 68. Yet Deutsche maintains a buy with a price target of 85. Roth MKM buy 85. DA Davidson 86. So Wedbush is the only bear there. The rest of them are rather bullish on the name, me included. So that's where we are. Hi, Carlos. Thoughts on Shop? Yeah, just talked about it. So again, Shopify, I got the calls, and we had some upgrades and downgrades on it, and or maintained, and one downgrade from Wedbush. And looking at the chart, like we talked about with the investment club, really just got to hold 71.37 or right around 68.63, which is your 20-day. I like more upside on Shopify, at least at minimum to fill this gap, and that's going to be my TP1 for the members. So again, for investment club, listen, I have a lot of members from 2019, 2018, and 2020. If you were an investment club in 2020, I mean, you're pretty flush. You're pretty good. There's not much to do. You're already in NVIDIA. You're already in Tesla. You're already in Apple and Microsoft and all that. Now, what my guys and what the team wants to do is stock swing, where options are just something they don't want to pay attention to. So again, names like DraftKings, Palantir, they've been in. Shopify, they've been in. AT&T was a nice buy on a dip. They got in. Keep an eye on the Chinese names as well. That's going to be something that I want to focus on coming up in 2024. Why am I saying that? Because of the fact that Chinese equities are trading at an all-time lows versus emerging market peers. And we know what happens when things start hitting those lows. Now, catching a falling knife, possibly. But again, I think there's opportunity there if China gets their stuff together. With the downgrade in mind, would you average your spot? I don't have spot. I think you talk about shop. No, I would not. I will not average it down. I will average up. That's fine. You can add to your winners if you want, but don't average your losers. Just don't. I mean, don't double down on the blackjack table with a bad hand, hoping for something to change. You stick with what you got. You stick with the plan. If it doesn't work out, that's fine. You move on. There's always another bust. The week is not over. It is only Wednesday, 9/21. So if we get some movement, I'm ready for it, and we're ready for anything. So let's make it the best day we can. QQQ, unfortunately, this is where we are. We can always hold it as a hedge for some NFP craziness, which is possibly a possibility. But we'll see what we get. Have a great rest of your morning, guys. I will see you guys tomorrow at 9 a.m. bright and early for the morning note. See you guys then. Cheers.